Hello, everybody. Happy Friday. We are here for Back to the Basics. If you're brand new to my channel, this is one day of the week where we take some things back to the basics. We are currently working with Sharla, so we're going to do a weekly update for her, and then we're going to talk about mortgages. Now, I know mortgages only affect some of you, but this is great information for when you're looking to buy a home as well. So let's go ahead and hop into this.
Wake up, today's gonna be a good day. Wake up, today's gonna be
Today we're going to go ahead and start with Sharla's update. Now, do you guys remember, did you watch last week's video where I laid out Sharla's entire month, shared what I sent to her for her budget, and said if all of the stars align and everything is perfect, then this is what can happen in the month of October? Well, surprise, surprise, things have already changed up, right? Because that's life. So you'll see a difference in the income, and you'll see a good thing and you'll see a bad thing, right? Because this is real life, you guys. And just remember, just because we plan it to happen one way and we want it to happen one way, doesn't mean reality is going to match what we have planned, what we have in our mind. And I know for myself, when I first started budgeting, this was one of the hardest things. When you are trying so hard and you are cutting costs and you are not going out to eat and maybe you're not getting a coffee out and you've canceled subscriptions, you are got an extra job, you've done all of these things and you're working so hard, and then surprise, surprise, life kicks you in the face. It happens to all of us. So today we're going to talk about Sharla's October 3rd budget. So let's put it right here. And if we look at the very first section for income, you're going to see, first of all, good news is that Sharla's husband paycheck was more than double what it was supposed to. So yay for that, which means, of course, that he worked harder. I believe he was out of town a lot, which is hard for Sharla with her medical issues, along with having 2 teenage boys, right? So, earning more money is great, but it does come at a sacrifice, right? But then on the next line, you see child support, 0. And you look up above, and Sharla made a note and it said, didn't pay it. And I talked to Sharla about this, and sometimes this happens. And so this is the first time that we've seen this since we've worked with Sharla. But luckily, her husband's paycheck was more than double. So yay. So our income is actually higher than we thought it was going to be. We budgeted for $1,400.87, and the actual income was $2,030, even without the child support. So if you look through the bills, you see that all of the things that were printed are pretty much the same as what I said, except for an extra $1 for the Capital One Platinum. But then you see Sharla wrote all kinds of things in on the budget. And so she's got for vehicles, she's got inspections, she's got registration, and that is for her son and her hubby's vehicles. She's got blood work that wasn't covered by insurance. And she has got, what is that? Oh, registration. I don't know what I was thinking. When I first looked at it, I thought it was REAL. And so I was like, what is that? But registration for a vehicle, right? And then we also see a tip for a massage. And Sharla, of course, with pinching all of her pennies and stuff, I know that with sharing it online, sometimes we get some comments where people are like, if you're really on a debt-free journey, how can you be doing this? Or why did you do this? Or I wouldn't do that. The thing is, you guys, this is Sharla's budget, and she gets to do whatever the heck she wants to do. It was like me on my debt-free journey as far as my consumer debt. People are like, if you're truly on a debt-free journey, you shouldn't be going on vacation. You shouldn't be doing this. You shouldn't be doing that. Guess what? It's my budget. I still made my goal. And I didn't want to go gazelle intense like Dave Ramsey recommends sometimes. It wasn't where I was. And you have to figure out what's going to work for you. But Sharla had a gift certificate for the massage. And like I said, she felt like she needed to justify that in her note to me. And I know that's because she's seen some of the comments back, and most of them are not negative, right? It's just people expressing their opinions, which is okay, right? We all have different opinions. And I do love it when people are like, I know you chose to do it this way, but have you thought about doing it this way? Because sometimes maybe I haven't thought of that, or maybe somebody else hasn't thought of that. So it's not always a bad thing. And so if we look right here, it was scheduled for $943. they spent $1,210.50 on all the bills and all of the things below. And then that left $819.50. And then we scroll on down through the cash, and the cash is exactly what we planned for. And Sharla is taking this cash out at the beginning of the week. So she's going to the bank, whatever, she's getting all the bills she needs, she's dividing it up. And then you guys, if it doesn't get spent, then she puts it towards other things. And she is having fun doing savings challenges right now. So that is something else that she's doing. So that leaves us with $544.50. And so if we look, then we see rolling on over, we scroll all the way down through the sinking funds. Holidays, that was a top priority for Sharla. And so she did add the $50. She's also adding $75 to savings challenges. And I believe right now she's working on savings challenges to go towards debt. Yes, you guys, we understand that she could just pay that $75 to debt. But if savings challenges and all of the fun that they are, if they can help you stay on track, then do them. There's a lot of free savings challenges out there. There's savings challenges that are $1 or $2 on Etsy. Do that. You don't have to spend a lot of money to do it. You can create your own. You can get some dice, a deck of cards. Like if you've got a bag, you can throw numbers in there and pull it out. I mean, really, it doesn't have to cost anything. And so a lot of people are like, you shouldn't be doing savings challenges if you have debt. Again, everybody has a right to their opinion, and I do understand. But for somebody like me, and I believe Sharla, this helps keep us motivated, and it's a fun way to save for either debt payments, for me, of course, mortgage, saving for my grandchild. You guys, I've got a brand new thing for my grandbaby. Sorry, squirrel moment. And then we see Sharla went ahead and added $100 to her debt snowball. I don't know exactly which debt she chose to go towards. We did lay out the plan for this is the debt it should go to. So I assume Sharla is following the debt snowball payments as far as they should go. And that left $319.50. Then we go to emergency fund, and you see instead of $130, Sharla put in $220. That means the $1,000 emergency fund is fully funded. Now, I talk about this all the time. I understand $1,000 is not enough to pay for many emergencies. And a lot of people are like, Dave Ramsey is outdated. It was $1,000 in the 1980s, blah, 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 blah. I get that 100%. But to set a little baby goal so that you can reach it first is amazing. And having that little bit of money can stop you from using your credit cards. If you're more comfortable having a $2,000, a $5,000 emergency fund before you start on your debt snowball and your debt payoff, then do it. Whatever you need to be comfortable with. And so that left $99.50. Sharla decided just to leave it in the account. That is what she's comfortable with. And of course, like I said, this is Sharla's budget. So this is about her and her family. It's not about me. It's not about you. Right? All right. So now I want to talk to you guys about mortgages. And the reason why I decided to do this was because, sorry, my computer's being weird, because that is my big goal right now is mortgage payoff. And a lot of people have made comments that because our interest rate is so low, we should be putting more into our retirement and not putting the money towards the mortgage. I can tell you this right now, that for us, not having a mortgage every single month is worth that maybe a little bit of loss in retirement. It is worth it for us because once we pay this mortgage off, Bridger's truck is almost, we're just rolling along on that. So that will be paid off before the 12 months is up, right? For the credit card we transferred it to. And so mortgages for us. Now, of course, for those of you guys that are like, oh, I'm going to stop the video because I don't have a mortgage. I'm just paying rent, whatever. I encourage you guys to listen to some of this because it is important and it can help you once you do decide to purchase a home. So when I was raised, it was just a very normal thing that you bought a house, you got a 30-year loan, and then you just planned on, paying on your mortgage for 30 years. I don't know about you guys. I don't want to pay on a mortgage for 30 years. That is a long time. But of course, when you're first buying a home, you often think, I can't afford this home unless I do a 30-year. So there are some reasons why you want to pay it off early, why, if possible, you go with a 15-year mortgage instead of a 30-year. Now, interest rates now are crazy. They're up, they're down. I haven't looked at them a ton lately just because I'm not refinancing my home. I am not doing anything, buying a home or anything like that. So I don't know what today's rates are, but I know that they've been crazy up and down. Luckily, Mr. Snow Gardener, before we got married, listened to me. And I say listen to me, but we talked about finances, right? Because before we were married, we still lived together. We had a home together. And even before we were married, I was paying half of everything because that's what we wanted to do. And I know a lot of people are like, wow, that's really crazy, putting money towards something that wasn't yours at that point. And I'm like, yes, that is true. And so then I talked to him about it before we got married. And at that point, he just wasn't comfortable with it. But then after we got married and a little bit more of the finances started melding together, I talked to him, and I talked to a friend of mine that does that type of stuff. And I said, all right, I looked and the interest rates are low. And of course, this was a few years ago, right, that the refi happened. Mr. Snow Gardener and I have been married for 5 years now. So it was after we got married. The interest rates were low. And I asked her to run some numbers so that I could present them to Bridger. And so we went through, and he refinanced for a 15-year instead of a 30-year. And the interest rate was 2.625. So amazing, right? That's an amazing interest rate. And I believe it cut off 8 years from his original loan by doing that. But also he took cash because there was some equity in the home, and not cash, but he paid off credit cards. He paid off a snow machine. He paid off these debts that had a lot bigger interest rates than what the home would. Well worth it. And when he did the refi, as far as his side of the bills, to pay everything off and then have the mortgage that was higher, he actually was paying, I believe it was like $500 or $600 less a month. So no brainer. But if you can start off with a 15-year, amazing. If you can't start off with a 30-year, then of course one thing you need to think about is paying it off sooner than 30 years. Right? Because like I said, who wants to be have a 30-year mortgage? You buy a home, like I was saying, the average age, in another video, I don't remember what video, but I was talking about the average age right now to purchase a first-time home, and I know this is because real estate is insane, is in the late 30s. I believe it was 37 to 39. If I get a 30-year loan on a home when I'm 39, I'm not going to pay that off until I'm 69. No. Okay. So I've got some numbers here. I tried to do screenshots. I tried to do screen record of our mortgage, and I wasn't able to. But let me tell you guys a funny thing. So the refi, my husband did this, right? This is his loan, right? He bought this home before we were married, before we were even together. And in the state of Wyoming, because we were married, I had to sign all the refi paperwork, even though the mortgage is not in my name. So the debt doesn't show up on me, but my name is on the house. But so I couldn't screen record or anything. So I have got a sticky note right here with some numbers. And we're going to go ahead and talk about them. So right now, Mr. Snow Gardener and I have just rounded up our mortgage payment. And we've been doing that, I don't even know if it's been a year because we were working so much on other debt. But we were just rounding it up. And this includes our escrow. We are trying to get rid of the escrow through the mortgage company. Unfortunately, I need Mr. Snow Gardener to be on the phone with me when we get the information if we can do that or not. And he is working locally or close to local, but he has no cell service all day. So I haven't been able to find if our mortgage allows this. I did talk to the mortgage department at the bank where we are, and the lady was very kind. Obviously, she can't give me any details on the mortgage since I'm not actually on it, but she did let me know that it depends on how the mortgage is written up on whether you can carry your own escrow or not. So it's not necessarily the bank or the institution that carries your mortgage. It has to do with your mortgage itself. I did ask her. I said, is that going to be on the original paperwork that was signed when the refi happened with you guys? And she said, no, it's not on there. So I can't even look there. So I'm not sure on that. So we've been rounding up $242.52 a month. So not a huge amount as far as a mortgage is concerned, but by doing just that small amount, In this loan, which is only a 15-year loan, it cuts off 1 year and 10 months. That's right, you guys. The interest savings, while they're not tiny, they're not as big as if you've got a mortgage that's 8%, right? But the interest savings for that is almost $3,500. If I don't have to pay the bank $3,500 because I find an extra $242 a month, I'm in, right? I am in. And so I also went through and did some other numbers, and I just kind of started and just kind of rounded up. So $500 extra a month cuts off I'm back. The dogs had to interrupt my video. If you guys don't know, I have 3 Yorkies, and they don't know that when I'm in my office talking to myself, they're supposed to be quiet. All right, you guys, I have a yummy new drink that my barista at my local coffee shop recommended. It is a Mighty Leaf vanilla bean whole leaf tea, delish, but it is created like a London fog. And so it's not the right tea bags to be actually a London fog. And then the syrup that goes in it is a new syrup they got, which is a Madeleine syrup, like the Madeleine cookie. It's super tasty. All right, I digress. Let's jump back into this. So I told you guys, if we just round up our particular mortgage, we will pay it off a year and 10 months early. Now I went through and I just put different numbers in the calculator, the amortization, I can never say that word, calculator on our bank website. You can find these free. If your bank for some reason doesn't have it, you can find ones that will give you a basic amount and how much you can save and how much less time you can spend paying on your mortgage. So $500, 3 years and 2 months early. That's right, you guys, an extra 5 years. And like I said, our interest rate is lower, so the interest saved isn't astronomical. But 3 years not paying, that's astronomical to me. And so it's $6,038 in interest saved. Okay, I could think of many things I can spend $6,000 on. Let's up it to $1,000. Now, I know some of you guys are going, $1,000 extra a month? I can barely make ends meet. I can barely pay my bills as it is. Remember, when you are starting to pay extra on your mortgage, you don't have any consumer debt. That is truly, you pay the consumer debt off first. The mortgage should be the last debt that you pay off. So $1,000 a month, you take off 4 years, 11 months, save $9,200 in interest. We're going to up a couple more times. $1,400 extra dollars. You save 5 years, 9 months. You save almost $11,000 in interest. $1,800, which is about double our mortgage. 6 years and 5 months, saving almost $12,000 in interest. We're going to up it up 3. We're going to notch it up good right here. $2,200, 6 years and 11 months early. $2,600, 7 years and 3 months early. And $3,000, 7 years, 7 months early, saving about $15,000. Now remember, everybody, I said this is only a 15-year mortgage. So if you are taking 7 years, 7 months off, you're cutting the time that total time that you're paying in half. Now, of course, $3,000 extra to our $1,700 something mortgage, that's a huge payment. And you guys know, if you watch my channel, I have been doing savings challenges and I have been reaching larger amounts, but I also have CDs that I've been cashing out this year, and that's helped quite a bit. So, of course, you know, this is just off of the calculator. If you do have a mortgage first and you want to pay it off, obviously first you need to have an emergency fund. You need to have commercial debt paid off. For us, even though we didn't have all the commercial debt paid off, like right now, Bridger still has his truck, right? We don't have it all paid off, but we have chosen to at least round up to the nearest 1,000, the nearest 100. Even if you're only putting a little bit extra, it's absolutely amazing. Some people do where they make one extra mortgage payment a year, and that's it. And it can cut quite a few months off depending on your mortgage. Some people maybe try to save up and do one extra payment every quarter, or maybe an extra payment every month. It doesn't mean that you are doing the whole payment, right? You don't have to double your mortgage for the month. But if you are able to make the extra payments, it's well worth it. Now, let me talk to you guys one last thing because I have sat on this concept in my own budget for way too long. So remember, when I moved into this home, it wasn't my home. I didn't purchase the home. And so I didn't take care of any of the particular details for the home. This includes home insurance. I have spoken to my husband about this for the past 5 years. And about 3 years ago, I got a quote from State Farm to move our auto insurance there as well as our homeowner's insurance. At that point, there was no way. We had a teenage boy on our insurance. We also had a teenage girl on our insurance. And so there was no way. It was way too expensive. So we stayed with Progressive for our auto insurance, and we stayed with Safeco, who is my husband's house insurance. That's who he chose. It was one of the cheaper ones, I guess, when he bought his house. And so for the past 3 years, or 2 years, I guess it's been, well, 2 years, 8 months, because I believe it was the beginning of January 2023. I've kept thinking about it, kept thinking about knowing that our homeowner's insurance was way too much. And when my stepdad passed away, I have to carry all of the insurance on everything until probate is done. This is what really opened my eyes to going, wait a minute, we're paying way too much money for homeowners insurance. And at the point that my son got his own insurance because he is a 20-year-old young man that chooses to drive too fast, that's when I really started going, okay, I need to take care of this. I need to get some rates. I need to do some stuff. And then I am the queen of procrastination. Do you guys procrastinate? I do. I don't know why. It was not that hard. I shot an email, typed up an email to my local State Farm guy that's like a block away from my house, and helped us when Peyton got in the one accident where it wasn't his fault. He's an amazing guy. And was like, I would love to get a quote from you for these vehicles, for this home. And I said, when you get a chance, can you give me a call? Let me know what information you need. So he gave me a call back. We talked on the phone for, I don't know, maybe 40 minutes. I gave him the VIN numbers on the vehicles, the mileage on the vehicles, the drivers that we had on the vehicles. The home, he asked me some info that I did not know because I did not purchase the home. But we went through all of that stuff. He asked me stuff that I didn't expect. He's like, what kind of flooring is in the home? What kind of counters do you have in your kitchen? What kind of, different things like that. What kind of walls do you have? Obviously, I knew that stuff. And so we went through all of this, and it was later in the afternoon. And so the next day he shot me a quote, right? He sent me an email. He's like, here's what I've quoted up. Here's the coverages. I've attached them all. And I replied back and I'm like, yes, we will be doing this. What else do you need? And there's a couple other things he needed, but I'm also trying to see if we can carry our own escrow. That means I want to pay State Farm directly for my insurance so that I am actually paying attention to what my insurance is. This way, my mortgage payment will always be the same. And so I'm waiting on that. But let me tell you guys what. I am such a procrastinator and I kick myself in the butt for this. We are going to be saving between auto insurance and homeowners insurance. I believe that we will save like $2,300 every 6 months because our homeowners insurance had gone up so much, which is why our mortgage was like skyrocketing. Like the past 3 years, our mortgage has went up so much. So I encourage you guys, and this is whether you have a home or not. I don't know if you guys have heard this, but they say you should shop around for insurance, car insurance, home insurance, whatever kind of insurance that you need every couple years. So don't be like me. Save that money, because what this means is this is more money we're going to be able to put towards paying our mortgage off. And you guys, for a mortgage update, let me grab this right here. I've got my book right here. It's not on the mortgage page, but let me grab it, share with you guys where we're at, just in case you guys don't follow my other videos. So I want you guys to see right here, this is the checkoff sheet that I used right here. And so you can see I just made a couple small payments. And so we're down to $136,000, $485.09. And right here, oh, you can't see that right there, We started June 17th of 2025 with $148,638.77. So since June, so we've got, if we were October 17th, we would have June to July, August, September, October. So in 3 months, we have paid off over $12,000 off of our mortgage. Now, this is our main goal. Don't forget, you guys, I have no credit cards. We don't have a ton of bills. And so this is how we've been able to do it. All right, you guys, that's it for today. If you didn't watch last week's video, I encourage you to go watch. There is some information in there. If you are looking for help for your budget because you are drowning, you don't know how you're going to pay your bills next week, you don't know how you're going to be able to feed your kids, you don't know what you're going to do, I encourage you to watch last week's video because there's some information there about receiving some free help from me. And for sure, I'm going to be helping at least one person for free. So go check that out. All right, you guys, until I see you guys next time, remember to keep on smiling. Bye, everybody.
Step 1, wake up early, gonna rise with the sun. Step 2, get some good, some food in you. Step 3, think real hard about what you wanna be. Step 4,